Everybody, Eric Hendrickson giving the Mortgage Minute for the week of October 7th. Well, last week was all about jobs. There were several jobs reports coming out giving us a little feel for the overall employment levels of the country. The ADP private payroll number came in well above expectation. Job openings report was very strong. Unemployment claims were low. And then the biggie, the non-farm payroll report, came out on Friday and was almost double expectations, showing that there was just a real strong amount of hiring still going on in the economy, especially in the leisure and hospitality, showing people are out traveling, spending money. So what does this mean for mortgage rates? Well, mortgage rates are driven by the bond market, and the bond market's driven by inflation expectations and also expectations of what the Federal Reserve is going to do. And really the Federal Reserve had talked about maybe needing to cut rates because they saw some cracks in the employment sector. Well, certainly last week all the reports didn't show any indication there were cracks there. It was kind of the opposite, that it was actually accelerating to 6-month highs. Now this is just 1 week and one set of reports. It does put a lot of pressure on next month's results, but what we saw in the immediate aftermath was bond levels really moving up about 25 basis points, which reflects kind of the Fed maybe not cutting as aggressively. We kind of lost a quarter point there, and that flowed through back to mortgage rates. So we saw rates kind of pushing up across the board about 0.25%. So where do we go from here? Well, we'll look at inflation this week with the CPI report, the Consumer Price Index. Inflation has been trending downward, so if we do get some low numbers again, that could hopefully put a little bit of, pour some water on the fire here that's been pushing rates up. But you know, inflation's not as big of a concern. The employment piece is more of a factor, but certainly looking for a low number with CPI and its compatriot, the Producer Price Index, coming out on Friday as well too. So hopefully that'll get things moving in the right direction as we wait for next month's job report, which hopefully shows a little bit more of a moderation, getting rates back in the direction we want. So anyways, we'll keep watching. Have a great week.